Welcome to the course MSD 014. Session will discuss Green National Income Accounting. Now that's a very important topic from ecosystem economics concept. Green accounting is basically a popular term that we have heard for environmental and natural resource accounting. It aims at incorporating environmental assets as well as their resources along with their sync functions into national as well as corporate accounts. Now, corporate environmental accounting is yet to be adopted very widely, though the concepts and methods are similar to those of national green accounting and hence do not need to be further discussed here. The conventional approach to national accounts largely ignores the observed scarcities of natural resources that threatens to undermine the sustainability of economic performance as well as growth. And this also considers environmental degradation as an external or a social cost of economic activity. Now, when we talk about conventional GNP and green GNP, it is very important to understand related to green accounting system, what are the basic concepts of GDP or gross domestic product, GNP or gross national product, and green GNP, that means green gross national product. So the GDP is one of the primary indicators used to measure the economic health of a country. It represents the total monetary value of all the final goods and services that are produced in an accounting year of a country by using existing factors of production that includes land, labor, capital, as well as organization. Now, GDP is not a tool of economic projections, which would make it subjective. It is just a measurement of economic activity. Now, that is why it does not reflect the sustainability aspects of economic growth. A country may achieve a temporarily high GDP by overexploiting ecological resources such as forest, air, water, land, etc., or by misallocating the investment. So, examples are also for such which countries are having high GDP by exploiting natural resources, especially the countries in Middle East, the countries in the Gulf that are producing and overexploiting the resources like fossil fuel. Now, gross national product or GNP is basically a monetary value of final goods and services that are produced in the current period by domestically owned factors of production at home as well as abroad. Moreover, it is considered as one of the indicators of economic condition of a country. Now, the difference with GDP arises because some production within the domestic economy is done by factors of production owned by the foreigners. GNP measures everything that has a market value. It does not include household activities, it does not include neighborhood help, it doesn't include leisure time, it also does not include natural resource degradation, natural sink capacity, depletion of resources and income distributions. Now, therefore, GNP in its present form doesn't include the contribution of ecological resources, nature, and nor it reflects degradation or declining ecological resources. However, green GNP includes degradation and contribution of natural resources, which is required for achieving sustainable development in this world. Now, net domestic product or NDP can be defined as a gross domestic product or GDP minus depreciation of man-made capital only. It does not take into account depreciation of natural capital such as air, land, forest, etc. Now, higher NDP of a country by exporting timber to any other country does not ensure sustainable or higher economic growth or higher green growth. Whereas green NDP is defined as a GDP minus depreciation of both man-made capital as well natural capital. So, if green NDP arises, then we can say that country growth is actually a sustainable one. Now, that's a very important aspect. Net national product or NNP is traditionally defined as GNP minus depreciation of a man-made capital or asset in per kilometer. Now, NNP does not take into account the depreciation of natural capital such as degradation of air, land, water as well as forest. This is the income left over after we put money to one side for the depreciation of assets. Now, depreciation of man-made capital is nothing but wear and tear of man-made capital like machines when they are put into use for production. The green net domestic product shows the real growth of the country, unlike traditional GDP or NDP, which overestimates and overstates the growth of a country basically. Now, when I talk about integrated environmental and economic accounting, we need to understand that the integration of environmental accounting into the system of national account or SNA started sometime back in 1970s. Now, in fact, this issue got immense significance among experts and economists how to integrate the natural resources as a component of a system of national account after publication of Brundtland Commission's report, Our Common Future in 1987. Now, this is also popularized as the notion of sustainable development. Furthermore, it was also recommended that in Rio Summit 1992, that integrated environmental and economic accounting should be undertaken by the governments of the signatory countries. The endeavor on this issue got started by individual countries or especially practitioners, and each of them have been developing their own framework, their own methodologies depending on the concern for the environment. The concerted and comprehensive efforts have still been underway since 1990 by multilateral institutions of the world to standardize the framework and also the methodologies. The most important primary benefit of the environmental accounting is to obtain more accurate overall picture of the country's income and wealth as far as produced and natural capital is concerned. Most importantly, the role and importance of natural capital is the individual sector may be better reflected while estimating its performance within a framework of sustainable development pathway. The valuation of environmental degradation and depletion in terms of magnitude of natural capital in various sectors may help in identifying the sectors which are to be prioritized while formulating environmental policies and also programs to achieve the goal of sustainable development for the country. And in present context, it's about localizing sustainable development goals. Though the incorporation of integrated environmental and economic accounting into system of national account or SNA is useful for the policy making of a nation, there are still diverse challenges, there are issues and practical problems pertaining to environmental accounting that are yet to be figured out. Now, that's an important context in terms of national environmental accounting. The major objective of national income accounting is basically to provide a proper information framework which will be suitable for analyzing the overall performance of an economic institution as well as a system. Now, national accounting is one of the most important policy making tool to appear in the last 50 years in the hand of policy makers because it measures GDP or gross domestic product. It can also measure net domestic product or NDP, and this has been used as a measure of economic progress and standard of living of most of the countries. Now, decision makers and researchers use these measures for new policy initiatives and for analyzing policy alternatives also. The traditional system of national accounting or SNA are now recognized as inadequate as they cannot accurately measure the contribution of environment and the impact of economic activities on it due to the extension and exclusion of the non-marketed services provided by our natural assets. They are also inconsistent treatment of depreciation on man-made and natural assets. And these are also inadequate representation of the degradation of environment. Now, this gives a very false impression of increase in income while natural wealth is basically depleting. And this is what it gives to decision makers and researchers. Hence, an alternative approach of green accounting can be a useful approach to sustainable national income accounting by removing the current silos and barriers. Now, green accounting system has the capacity and capability to include environmental goals in conventional economic development. The environmental management theories developed in last 3 decades have stated that environment is a mean of economic wealth. If these environmental services were sold in conventional market, they would provide a more positive price. Moreover, these services are scarce in nature. Keeping the economic value and scarcity nature of environment in mind, if we think it will be a conventional economic account, then environment will be an additional economic sector, that is nature. We have to treat the non-marketed goods and services generated by the environment in such a way like marketed goods and services generated by conventional factors and sectors. Now, there are several flaws in the conventional system of national accounting. In the very early 1970s, it was found that the increased importance of environmental conservation that is highlighted the deficiencies in the conventional system of national accounting and emphasized the need for integrating environmental indicators to national accounting to make it more reflective of its true wealth, that is, the natural resources of the country. Now, the desire to improve measurement of the effect of economic policies is responsible for much of the interest in adding more information to the accounts about natural resources and the environment. The growing interest in policies that promote sustainable development, for example, has led to suggestions that natural resources and the environment should be treated as a capital asset. Providing services to the economy is so-called natural assets or capital. Firstly, the conventional S&A takes into account only goods and services traded in the market and does not include the non-marketed or intangible goods and services. For example, the regulating ecosystem services, the supporting ecosystem services that include biogeochemical cycling, flood control, cultural benefits, psychological benefits, and so on and so forth. S&A only considers the economic contribution of forest and ignores its intangible economic environmental services. Similarly is the case of waste disposal services of the environment are not recorded in the national accounts, while they are very significant amount of such services. Now, second is that natural capital contributes to production just as any other physical capital does. The absorption capacity of the environment or the wood that is harvested from timber can contribute to the production just as machines contribute to the manufacturing of goods. Similarly, the environment or natural resources can depreciate such as machines do from wear and tear. Also, as with physical capital, investment can be made in some forms of natural capital as means of maintaining the increase its stock. For example, expenditure to maintain levels of environmental quality or to expand the stock of timbers. Now, investment in either physical or natural capital requires current consumption be sacrificed in expectation of a flow of income for the future. In short, the S&A neglects the stock of natural resources as well as environmental benefits, nature's contribution for human well-being, and their depletion coupled with degradation of environmental quality. Now, third important aspect is that S&A does not adequately represent the degradation of environment. It ignores the capability of environment to dispose of the waste, even though its ability to absorb pollutant is a very valuable service to both producers as well as consumers. Money that is spent on avoiding damages caused by pollution or so-called defensive expenditures on such items such as pollution abatement equipment and some perception medicines is included in national income but is not differentiated from others of investment or consumption in the national concerns. Now, question arises, what are the available methodological approaches to green accounting? Now, so far there are 4 important approaches to green accounting: the pollution expenditure accounting, the physical accounting, development of green indicators, and extension of S&A type system. Now, when we discuss pollution expenditure accounting, one of the most important weakness of this conventional economic approach is to develop data series on pollution abatement and other environmental expenditures. This involves developing data series on pollution abatement and other environmental expenditures. Such data series has been maintained by USA since 1972, and this is also available to other income countries. Now, the use of pollution expenditure accounting data has limited scope for policy because it only gives you an indication of how various environmental policies may affect productivity of different sectors. So comes another approach that is called as physical accounting. So this second approach is basically to improve the conventional income accounts and to supplement these accounts with physical information about natural environment as well as its status. Now, physical account refers to the natural resource and environmental accounting of stocks and changes in stocks in physical, that means non-monetary, units, for example, weight, water, area or number. Now, there is another approach that is qualitative measures that is expressed in terms of quality, quality classes, types of uses or ecosystem characteristic that may supplement quantitative measures. These combined changes in asset quality and quantity are called volume changes. Now, for example, the area under dense forest, open forest, volume of stock of timber, area distributed by fire, disturbed by fire, or you may give the quality in terms of carbon dioxide emissions, carbon monoxide emissions, suspended particulate matter, nitrogen oxide emissions, etc. Or water using different physical indicators. This might be BOD or biological oxygen demand, COD or chemical oxygen demand, DO or dissolved oxygen. Now, this type of information can also be arranged in conventional input-output type of matrices. Now, I'll give you an example of Netherlands that have been using such a complete package of input-output matrix system in their national accounting matrix, environmental accounts or NAMEA. This system fully integrates economic and physical environmental information. Development of such physical account is important as the accounts can provide the input for construction of various environmental indicators, and this can be also used for scorekeeping purposes. Now, physical accounting framework has been acknowledged as a major tool to address societal environmental issues by most of the professional societies like International Society for Industrial Ecology or Industrial Society for Ecological Economics. Still, the basic philosophy behind this physical accounting framework is that economy has to be seen as a subsystem of environment that is embedded in the natural process. And the main argument is that any economic activity has to basically rely on a certain exchange of material and energy between nature and economy or within the economy has to be exchanged. However, there has been their own set of difficulties to use physical accounting for policy purposes. Some of them are the choice of appropriate physical units of measure that is not obvious. There is also incomparability of units. There is also difficulty in getting condensed description as the units are not very similar. There is also involved development of huge data sets to different quality indicators for forest, air, land, water, and without reaching general conclusions on their economic and non-economic significance. Now, there is also potential severity of environmental problem not reflected, and hence the decision makers will not be able to set relative environmental priorities while taking these investment decisions. Now, these are some very important set of difficulties with physical accounting. So, there is another set, and that is extension of SNA type systems. So, the approach modifies the existing conventional system based natural accounting by introducing environmental economic interaction to all of its accounts, and ambitiously this also covers the information required for above three approaches. The first is to make the environmental policies more effective in line of overall economic development and objective. This approach basically helps to generate and systematically assemble environmental resource data. The system is the combination of UN satellite data for integrated environment and economic accounting approach, that is known as SEEA, and the environmental and natural resource accounting framework, that is known as ENRAP. And this has been adopted very nicely in Philippines, our neighboring country. The principal difference between these two lies in the extent of their adherence to SNA concepts. SEEA appears much more concerned with the adherence to the principle of SNA than to the economic theory, whereas the ENRAP framework stresses more on the consistency of economic theory within SNA. So what are the main objectives of SEEA, that is also called as Environment and Economic Accounting Approach, that is integrated? So the first one is division of environmental related flows and stocks. So according to this objective, the environmental protection expenditures may be treated separately. These expenditures have been treated as a defensive expenditure to compensate for negative impacts of economic growth. Second objective is to link physical account with monetary environmental account. Now this objective creates a corresponding link between natural environment and economy in physical terms. Third one is valuation of cost and benefit for environmental goods and services. So this SEEA expands that complements the scope of traditional SNA by calculating the cost of utilization of environmental resources in production, process and final demand, and the cost of environmental degradation by the process of pollution. Now the fourth objective of this SEEA integrated approach is inclusion and measurement of natural capital. So this approach expands the meaning of capital to include not only man-made but also natural capital. And natural capital comprises of scarce renewable resources, non-renewable resources and cyclic resources like water. Now assessment of indicator of environmentally adjusted product and income is another objective of this approach. So in integrated SEEA, it is explained and measured the cost of environmental degradation and changes in the quality. So after these adjustments, now it is known as environmentally adjusted net domestic product or EDP. So the UN satellite system for integrated environment and economic accounting, SEE, has 4 categories of accounts. The first one consists of purely physical data that relates to flow of materials and energy. The second one is a hybrid account that is produced by combining both physical and monetary data flows. For example, emission accounts of GHGs. There is also a second category of account. These accounts include the principle of existing traditional SNA, which are related to management of the environment. Now, environmental protection expenditures are actual expenses that are incurred by industries, households, the governments and non-governmental organizations to avoid environmental degradation or eliminate the effects after degradation has taken place. Now these are included in the SNA but usually not identified separately in conventional approaches and final use of accounts. Now the integrated SEA, the environmental resources are measured both in physically as well as monetarily and put it in separate accounts which are known as third category of account. For example, timber stock accounts. Now they have both opening and closing balances and there are also changes therein over the time period. So the final category of SEE accounts are related to the impact of economy on environment. So this category of account is basically adjustment accounts, and the traditional SNA adjusts the positive and negative impact of economy on environment in 3 ways. So these are depletion, defensive expenditures and also degradation. So when we talk about green accounting in India, I know this is a very a concept that has been traditionally valued and have also been tried to be implemented. So in this context, Green Accounting for Indian States and Union Territories project, GAISP, was launched in very early 2004, and there was largely in recognition of the fact that GDP growth percentages are substantially misleading about the economic growth in India. So GISP was undertaken by GIS, the Green Indian States Trust, an Indian NGO, which was created in July 2004 to promote sustainable development in India. So GISP proposed to build a framework of adjusted national account that represents genuine net addition to the national wealth and economic development. This was referred as green account in various literatures. Now, such a system is environmentally adjusted. National income accounts will not only reflect in economic gains, but also will reflect depletion of natural resources and health cost to pollution. But this will also reward addition to the stock of human capital through education. Now, green accounts for India and its states will also provide a much better measure of development compared to GDP, growth percentage, and gross national domestic product growth measures. So what are the challenges of green accounting? Now that's important to understand because we have been talking a lot, the countries have been talking a lot about green accounting. One of the most important benefit of green accounting is it will increase the information available for catalyzing better policy decisions. Now when I talk about the issues, one of the key issues is the effect of environmental protection on economic growth, the distribution impact of environmental natural resource policies, and the link between trade, environment, and resource policies. Now, there are other challenges like environmental protection and economic growth and their linkages, understanding the distribution impacts and natural resource policies, understanding the link between trade and natural resource policies, and policymakers basically have to appreciate the notion that nation cannot make policies without considering what is happening in other countries. So that has to be well understood. So national accounting system that includes environmental and natural resources can provide useful information during negotiations over nation's commitment to restore and maintain natural capital. There should be trade restrictions when a country's production and processing method relate to and lead to excessive damages, for example, because of pollutants. And one reason is difficulty of determining the effect of transboundary pollutants. Now that has an industry cost. There are at least two more good reasons for incorporating environmental and natural resources into national account. First, incorporating such information that could lead and result in more comprehensive source of data. And second, the process of compiling information for a single integrated data set that could yield new and important insights. So with this, we come to this end of very important discussion on green accounting and its relevance. We discussed different approaches, methodologies, what's happening and advancement in the world. I'm sure you would like to read some further readings and would like to see what is happening in the context of green accounting across the country and across the world, and you'll get to know about the recent updates. And this is the future. Green accounting is the future of economic growth. So this chapter and this session is going to strengthen your knowledge and basic understanding about green accounting. With this, we are to the end of this session and we'll be looking forward to interact with all of you in the next interactive and interesting session on ecosystem economics MSD 014. Thank you so much.